Perth, you mentioned, I think the expression you used was circle of death with Wall Street and China and this negative cycle of encouragement. What about positive encouragement? What do you recommend folks do who want to see, say, their university endowment or their pension fund make more ethical investment decisions?
Yeah, I think that, if what we're trying to do here is there's a lot of positive benefits to freedom, right? Freer countries have higher life expectancy, lower infant mortality, higher gender equality, lower poverty rates. And if you look at their poverty rates, the poorest people in the freer countries are significantly more wealthy than the poorest people in the least free countries. They have lower corruption. They have higher income per capita, higher GDP growth. These are all the benefits of freedom that I think we should focus more on. But they're very kind of nebulous and they're hard to measure. So what we try to do with the FRDM index is, in the emerging markets, we try to be a running scorecard for freedom. And if you look at our performance since inception 3 years ago, compared to benchmarks like EEM, IEMG, or VWO, like the kind of market cap weighted benchmarks, it's very stark outperformance. It's crazy. I think that's because we've had some very extreme events like COVID and the Russian-Ukraine war. So this has really shown the benefit of investing in the freer markets. And when Wall Street and everybody else is so focused on China, on Russia, Saudi Arabia, some of these very unfree markets, I think that takes the focus away from where it should be, which is where the freer markets are. And they're missing out on those markets. And that's a huge opportunity cost. So I think for people that are wanting to encourage their endowments or their schools or whoever to invest in a way that supports freedom around the world, especially in the emerging markets, you should focus on those growth stories that are the growth stories of the future. These are the freer countries. They have better, more sustainable growth. It's not debt-driven, state-mandated growth. They have better recoveries. If you look at the recovery from the COVID drawdown, the freer markets significantly outperformed the unfree markets in the recovery. And they have better use of human and economic capital. So there's less capital flight and capital destruction. When you have something like the one-child policy for 30 years, that's huge capital destruction on a human level. When you have people, governments coming in with a stroke of a pen overnight, making companies nonprofits, that is huge shareholder capital destruction. So there's a lot more capital destruction and capital flight from these types of unfree markets. So the freer markets also, because they have better institutions, stronger institutions, better rule of law, and investor and private property rights, and individual protections, they're the safe havens in the emerging markets, especially. So we should focus more on those markets and less so on the unfree ones to find the growth stories of the future instead of focusing on the growth stories of the past.